it works in up and down. Okay, here's the point. I just wanted to show you a different picture. Remember I said I'm going to adjust it if the first 30 minutes turns out not to be the line as cleanly as I just demonstrated. In this case, the first 30 minutes held it on the bottom, right? Now it's rallied up. When it broke out of the first 30-minute high, it rallied a little, and then look what became the support. Now, support is not a price. Support is an area. If you change, and if you're looking at support, and a lot of the things that happens with traders, because we work with a lot of beginning traders, and they come to us and they say, yeah, but you know, Murphy's book said that the support was 59.67. Not 68, but 67. It doesn't work. I mean, it doesn't work that way. 67 may be the chart point, but you have to look at that chart point and as a trader figure out the area around that chart point that the market cares about. So here's an example where we broke out of the high of the opening range, and if you could see closely, you could see there's some little wicks that are coming back down into that opening range. Okay, it's an area. The fact is, again, if I can convince you that every day I know that there's a good chance that this thing, once it breaks out of that resistance, right? What happens when you break resistance? What do you then call it when you're above it? Support. Is it working? Yes. If it wasn't working, it wasn't support. Okay, but now that I know it's working, I can trade it.
You trade within that range?
No, I don't. I don't. Why? I don't want to. I'm not going to try and guess the high and the low here necessarily. Oh, in here? Oh yeah. Oh yeah. So here we break out, we consolidate, and that gives me the opportunity to then validate the fact that the opening range is working. I want to follow this one. Now, it could be that I just liked it and I bought it, and this is just working out well. It could also be I've got a second breakout, right? I've got a good level of support I'm breaking out from. Look where it came down to at the end of the day. Right down to the level of support that was created above the opening range. Okay, now I can't tell you in 30 minutes how to identify all the entries and exits. Like I said in the beginning of this, I want you to go home thinking, wow, if I look at the opening range, I'm going to see things in the market I didn't see. I'm going to see support and resistance that I didn't know was there. I can build a trading strategy around that. I can know that I shouldn't panic out right now because the support's there. Now, a reversal. Trading within the range. How are you going to know the difference between a breakout and a reversal? This gets back to my point earlier about the line. I've got a line here which is the low of my opening range. What you don't see here is that this is a gap higher. It's a significant gap higher. Earlier question. That means that the market's got some real power behind it. If I'm a day trader, I have reason to believe that if I'm reading the market that's just gapped higher, and it's holding that gap higher, that there's some merit to this. There might be some bullish action here. How do I know when to get in? How do I know when it's too dangerous to get in on the long side? How do I know when it's time to sell it or give up on it? If you come into the market with a bullish or bearish bias, you have to know when that bullish or bearish bias isn't working for you. That's what I'm showing you here. If you come into the market and say, I don't want a bullish or bearish bias, I just want to trade whatever direction it goes, you have to be, in my opinion, a little better of a trader, but that's what you can do here. Which direction is this thing going? It gapped up so significantly you don't even see where it closed the other day on this chart. So we've got a strong gap higher, starts to sell off, and this day might look familiar. You're going to get to know this day. Where my opening range low, really? It's the low of the candle that is a couple bars before the line starts, right? So that's the level. We break it a couple times, can't close below there. Every time, the two times we go through it, it just comes right back through. The low of the opening range is holding. Is it going to be a reversal? How do we know? I'm going to do this quickly just to give you a sense of how you can build in some really simple ways of looking at the market to define whether or not it's a reversal. So here's blowing up the same situation. We're going to look at this area. The first thing I can look at for a reversal is how am I doing relative to the last bar. If I'm above the high, I'm making some bullish progress. I'm making some bullish progress in an area of the market that I already anticipated might be a low. Now it's confirming that it might be a low. What else could I look at? What is this line, the second yellow line? Say it again. It's the low of the 5 minutes. Okay? Remember I said the 5-minute opening range is important? So now this stock, the index, broke down out of the 5-minute opening range, couldn't go anywhere, couldn't get out of the low of the 30-minute range. Now it's closed back into the 5-minute opening range. The bears just didn't have it in them. The bulls are taking over. 2 reasons to think I might be reversing. Still within 1 bar of the low of the day.